Good evening and welcome along to our weekly video on the US markets brought to you by SG Futures. It is currently coming up to 7:30 in the evening GMT on Sunday the 15th of November. And that was quite a wild week we had on the markets. We had some pretty interesting news on Monday regarding a vaccine. We had an enormous gap up, and for the rest of the week we kind of just consolidated. What we're going to cover off in the video this week is just a couple of the technical levels that we're looking at and some potential trades which we may take on this week, as well as taking a look at what we think the market is trying to do in the medium term. So without further ado, let's just get into it. So what we have here in front of us is actually our daily E-Mini S&P candlestick chart, which we put together last week, and it just shows what we spoke about in regard to this particular blue trend line, which over the course of this week we've really respected. If we mark out the candles from this week, it is those particular set of candles in here, that's this week. And we mentioned last week that we might see a potential retest of this particular trend line, and we called out a level of 35.1250, and I mentioned in the video last week that there's a good chance that this would trigger during the Globex session, and lo and behold, on Sunday night into Monday morning the trade triggered, and I think it was about 11:30 in the morning here. I was sat here doing some research and I heard my fill noise go off, and usually when I hear my fill noise go off it's because I've been stopped out of something, and it's usually because of a Trump tweet of some sort, but to my absolute amazement it was the market rallying hard on the back of the vaccine news, and it hit my take profit level. So it was a really nice little trade in there, and we came into the cash session in the afternoon relatively bullish. But if you look at kind of what's happened over the course of each of the days, just remove those drawings, but if we look at what's happened over the course of this week, this big red candle here in the middle is our Monday candle, and this is on the news overnight or pre-market that Pfizer put together a vaccine with 90% efficacy. And the market went absolutely gangbusters, and we rallied hard up to the, nearly at the 36.50 level. So we're really printing some new all-time highs there in the pre-market. But we opened, and it was very easy to see almost straight away that we were pretty much going to be printing the high of the day, based on the volume of contracts that changed hands when the market opened. We had a little look above the open, and then we just collapsed and spent most of the day selling off, where we closed almost 100 points lower and almost down testing this particular trend line down here. But then we came in on Tuesday, we had a little bit more positivity, and again the market, I'm not sure you can really see it here, but this particular day on Tuesday it respected our trend line. So we've broken above our trend line, and we've now tested it from above. Granted, we tested it from above during the Globex session on Monday, but that doesn't really count in this particular instance. But we tested it during the daytime frame, during the regular trading hours, and we respected it, and we actually closed inside Monday's range, which is really, really important. And it gave us some good impetus on Wednesday that we're exploring further up into Monday's range, because Monday's range has now become a really good set of reference points for us when the market has explored higher during regular trading hours, and these prices have been auctioned on the way down. And as we go back into them, we can see how price action is reacting at different price levels, and see whether we're getting acceptance or rejection. And Thursday we opened inside Wednesday's range, we explored higher and then closed, and we came off, and we closed inside Tuesday's range. And then on Friday we had a pretty positive day where we tested the previous all-time high, which was 35.88-ish, but importantly we closed below it, which is again significant. What we can take from this particular week is, yes, we had the enormous gap up on Monday, but the market spent the rest of the week doing was, it's starting to price in a couple of factors. Yes, there is some light at the end of the tunnel in regard to an effective vaccine. However, the market is exploring the possibility that it could be quite a long time before we're sort of out of the woods on the coronavirus issue. And whilst the vaccine is an important milestone, it could be a lot of road we need to get down first. And it's pricing in the possibility that maybe there's going to be a further lockdown. One of the anecdotes I heard during the week was that Joe Biden one of his first acts as presidency will be to look at locking down some cities within America, and what that will mean for certain sectors of the economy and certain sectors of each of the markets. Now, what's important to notice, and we mentioned this on Twitter during the week, is the S&P 500. It's 500 of the biggest. It's 500 of the biggest stocks in America, and it's broken up into different sectors. I think it's about 11 different sectors. And what we've seen pretty much between March and November has been a real acceleration in the work from home tickers, and they are your Zooms, your Microsoft Teams, Slack, anything that enables remote working or supports remote working, or that's going to benefit from offices not being open and retail not being open. They've really those stocks have really made some significant gains. What we saw over the course of this week was the stocks that have really suffered during the lockdown. We've seen momentum move into those stocks. So your airlines, your hotels, your cruise lines, your consumer discretionary, your retail. Those particular stocks have really rallied. And it's been a shift away from the sort of tech stocks into these other stocks that have caused a bit of divergence among the markets. And one of the biggest laggards now over the course of last week, and if we were to just look at last week, you would say that Nasdaq is the real underperformer, and where we're expecting trade to go this week is going to be in the Nasdaq, and we're going to be looking at some pretty important levels there, which we'll get to later on in the video. So what has happened this week is the market is feeling out the expectation that we may see some lower prices, we may see some further bumps in the road in regards to the coronavirus. We're not out of the woods yet, and the market appears to be pricing that in. It's also doing something that's quite healthy, and that we talk about all the time from a market auction theory point of view, in that we've broken higher, we've gapped higher, but we've spent 4 regular trading hour cash sessions exploring price and doing price discovery inside these areas where we gapped over. So it's a really positive thing from a market structure point of view, and we like to see things like that. So whilst we're maybe leaning on the bull side of the fence and we think this is maybe a little bit of a weak rally, what the market is doing is positive, and it's positive behavior. And if we were to break higher, it's built on relatively strong structure. It doesn't mean to say we don't come back and relook at these areas or re-examine these areas, but it's built on strong structure. Now, from an individual stock point of view, there are some stocks which have sold off. They're probably overextended from an oversold point of view. So if you're to look amongst your work from home tickers, there's probably some bargains to be had and some short-term money to be made there, as we expect coming into Monday and Tuesday this week that some of those will maybe start to recover a little bit. So your Zooms, your Amazons, your Microsoft, stocks which have a big work from home presence that might have suffered, they may see a bit of a recovery this week. So that could be something to potentially go and look at, and try and find some potential areas to explore in your watch list. By no means is work from home dead and buried. It is definitely going to be something that will continue for the medium term. I think we're probably looking at maybe another year to 18 months of needing to have these software stacks to enable remote working, and I think the weakness that you see in some of these stocks within the Nasdaq, it would count as opportunity, and I think there is good opportunity there. So definitely something to look at. So that's where we're at from a daily candlestick point of view. There's quite a lot in that. What we expect to see next week is we hope to see a respecting of this particular trend line. If we do see if we were to have a little look below here, we might come off the 20-day moving average, and we might come back up here. And if we do come back up here, that would be a sell for us. So depending on what type of day we're having, this could be a trade which might set up for us, because this trend line has been respected so far for the most part. And when we start to see trend lines, we keep using them until they're no longer valid. So this is something that we're going to look to immediately this week. So we're going to be looking at levels, in around the sort of 34.90, maybe 34.95. They'd be the sort of levels. If we break lower here, come off the 20-day moving average, we would look to maybe sell up here, depending on what our internals are like and whatnot on the day. But that's a potential idea to look at. Alternatively, we may see we may open here, we may trade up to the 35.88, and then we might look to buy a dip down here below 3,500. I still think 35.12 is a pretty good level. On Thursday, the level was respected, so that could be again something we would look at this week. So it's just some potential ideas of where the market may go. Now, if we are to break higher up here, and we start to get into the upper end of Monday's range, and we pull back, the previous all-time high would be one we maybe look to buy for a leg higher. So there's some potential scenarios we see maybe playing out. If we see maybe a double top in around here, 36.44, that looks to be a pretty key level. If we see a double top there, there's a chance that on the third test we do break through it. So that would be potentially something we look at. So let's have a look at things from a profile point of view. So when we go into our weekly profile, this is the weekly profile we have in here. So this is our week, and you can see here on Monday we explored right up into the sort of the high 36.44 level, and we spent the rest of the week filling out this chunk of the profile down here, which was where we built out value. Importantly, we closed the week just in here, so we closed inside of the value area high of the week, which is interesting. And Friday was a really interesting day, and there are some nuances in there which makes me think that it was a little bit of a head fake, and that there may be potential for some further downside on this. When we look at the rest of this structure, we can see that the low we put in last week was in and around the fairest price to do business the previous week, which was our volume point of control, and also where the previous week closed, 35.04. Really, really important nuances that you would never ever get on a candlestick chart, and you would never be able to see this on a spread betting platform, for example. So these are really significant levels, and when they do come up, particularly the E-Mini S&P really tends to respect them. Where we're looking at this week is we believe this is from sort of 35.77 down to probably the previous week's range, 35.24, maybe 35.20. We would deem to be, that would be the value area for last week. We deem that to be well auctioned. We want to really see acceptance or rejection of this from 35.80 right up to 36.46. And we'd like to see a filling out of the profile there, and maybe some attempts at going higher. Now, any kind of bearish news, we do start to fill out some of these low volume areas of the previous week's profile. Some of the gaps, they immediately become targets, because I feel if we do break below the 3,500, I think we do target some levels in and around the sort of 34.20, which would be the week previous again, that high. We'd be looking at sort of 34.15 as some potential targets to the downside. So that's things from a weekly point of view. It's really just a wait and see, I think, this week. I think we've got to see how the futures open. I think the market is still very much digesting the news around the Pfizer vaccine, and how effective it's going to be, what are the long-term implications, how is business going to be affected in the long term, and how things are going to play out. What does the world of work look like? What stimulus is going to be needed into the long term, and things like that. So when we look at our daily profile, this is the week last week. Let me just mark it out for you. So this is our week here. So these are the profiles that we're looking at. What is interesting is on Monday we closed pretty much at the lows, so really at the lower end of value, and then the following day we gapped lower, explored higher, we got about 3 or 4 ticks above the previous close, again, which is really, really significant. And this was during F period, so it took us a long time to get up there. So I think we opened down here somewhere around 35.35, if I remember rightly, and it took us a couple of periods to get up even above here, and then the minute it failed above here, you could pretty much guarantee that we'd printed the low of the day. We were starting to see these late day rallies, where it's sort of L, M, and N period. The price was just driven higher. What is noteworthy is during Tuesday's profile, we put in a low of 35.06, which is the closing price of the previous Friday. Often the closing price of a week is really, really important. It's a line in the sand, so like weekly levels, a weekly high, weekly open, weekly close. They're levels to really look out for, and that's one that we looked at. We didn't get filled. We tried to buy it and it couldn't get filled. So that was a sign that there's a million other people in the market also looking at that price. Then we look at Wednesday. We had a gap in value, so the value gapped higher, and we're printing new value up here, so this grey area, and then we closed above value, which is again a really positive statement. And then the following day we gap lower, and we really start printing some serious lows. Interestingly, we didn't get down to the weekly low, which could tell us that maybe this particular low is the low of this particular period of time. We could consider these 4 days as 4 days of balance, and this could be the low and this could be the high. And if we were to take, the high and the low, and so we've got probably about 85 handle difference, you might suggest that maybe we've 85 handles to the upside in here. We could have, that could be the high that we're looking for. So we'd be looking at probably about 75-ish, 35, 75-ish, could be a potential line in the sand. And they're just balance rules when you have a period of balance. So interestingly, we got one tick below our 35.13 sort of wizardry level from our trend line on our candlestick chart, and we got one tick below that. And despite some expirations higher, we closed pretty much smack bang in the middle value, which is interesting. And then on Friday, we'll get into this on the proper profile chart. We had value overlapping from Wednesday and Thursday. So these three value areas are overlapping, and we really looked like we were going to close probably inside value, and then the price just got jacked up right into the close, and it printed a high of Monday's value area high, which is so significant. Again, this is something that you would never see on a candlestick chart. No one's ever going to show you this, but these are literally to the tick. So if you want to trade the E-Mini S&P, you really got to understand market profile and mark out these levels that are important. And we knew with this huge elongated profile on Monday that levels contained within here were going to be really, really significant. So any single prints, the closing price, the opening price, the VPOC, we have a naked point of control in here, so a volume point of control in here at 35.98, and also a time POC of 3600, I think. They're two levels we're really going to look at next week and how the market responds to them. There will be traders out there who will blindly sell those levels when we get up there. So Monday is a particularly emotional day. There's quite a lot in it. An elongated profile tells you that there's a lot of emotion in it, and the levels become all the more significant. So when we look at our sort of regular profile that we trade off, this is our E-Mini S&P, and this is what we work off when I talked about the Friday closing price. So we can see here an M period when we rallied from L, M, and N. M printed in a high on Friday of a tick just inside Monday's value area low. So that immediately tells us as we come into this week, this is an area that's important, and we will look to see acceptance above the this particular price, so 35.90. If we start to get acceptance in here, we start targeting some other levels in here. So this will be, the initial balance low 36.05. We'll immediately start to look at that. We'll also look at the volume point of control, the fairest price to do business from last Monday, 35.98. That would be there are traders out there that I know well who would just sell that. When the price gets up there, they would treat it like a single print and they would just sell it. Then you have the time POC up here at 3600, volume point of control in here, and a time point of control up here. And this particular area could definitely be a place where people might like to get short, depending on what the tone of the day is. Again, this could be something that might happen during a Globex session, so it's just to be potentially prepared for that. So if we look at how the rest of the week unfolded, I'll just collapse this. What's interesting on Friday is we closed 35.81, but the fairest price to do business on Friday, the volume point of control, was 35.59. So we're good 20-ish handles off those two, between those two prices. It tells us that maybe this closing up here, or this spike into this period up here, it might tell us that maybe this is artificial and this isn't real buying that took it up here. It could have been some shorts that got short maybe earlier in the week and who are maybe covering coming into the weekend. I don't know. But it feels artificial, and the fact that the volume point of control remained down there tells you that not enough business transacted up here to warrant the VPOC moving higher. So again, that's something that we carry into next week. This would probably take away from any sort of bullish stance we might have as we come into the week. It's very difficult for us to say right now where we think the E-Mini S&P is going to go. From a candlestick point of view, we've given out a couple of scenarios here, which we think, which may or may not happen. Again, this will all depend on how we open in the Globex session later on this evening. But these are some potential moves that we may look for. But I don't think the big trade this week is going to be in the E-Mini S&P. I think the one we really want to look out for is in the Nasdaq. And this is our Nasdaq candlestick chart in here, our Nasdaq futures. And we've seen on Monday that well, when we saw last week, we talked about this, that these two particular candles in here, that they respected the trend line. And then on Monday, we gapped up and traded straight through the trend line. We gapped down again, came off pretty much a few ticks off the 20-day moving average, and then kind of balanced for the following 3 days. Interestingly, on Thursday, the high of the day was the trend line. And on Friday, the high of the day was also the trend line. So there is potentially the opportunity that if we do break higher here in this particular market, so if we do break higher here, what we may look for is some sort of a break maybe up here, might come closer to the previous all-time highs, and then if we can come down here, get a retest, and then try and take it higher. It could be this sort of level in here is what we could be looking at. So we'll probably take some levels off the market profile, but this is the general idea of what we're potentially looking at from a Nasdaq point of view. For the most part, I think probably for the last sort of 12-18 months, the Nasdaq has been the real leader and has dragged the S&P forward. And given the moves that happened last week, I think this was a real shift in some of the other stocks that have been laggards for a long period of time. They're starting to catch up now, and as a result, the Russell 2000 and the Mini S&P are now going to lead, and they're going to pull the Nasdaq forward. So if we see a continuation of a bullish narrative on the ES and the Russell, then we can. This is when this sort of trade may come into play. Alternatively, what we would look for is, if we did break lower in here, we might have come off the 200-day moving average, and when we trade back up here, we would then look to go on the sell side. So there'd be some potential trades from the long side here, and then from the short side here, but it's really around the trend line, and this trend line has really worked over the last sort of 3 to 4 weeks. It's shown some pretty good levels to pivot off. So when we look at finally the Russell 2000, this is one which we think may drag the other indices forward. Now the Russell 2000 is 2000 sort of mid-cap stocks, and these are the ones that would be probably most hit by another lockdown. So this index may start to point the way through. It's usually an outlier anyway, but it may start to point the way forward. What's interesting here is this is the week that was. We've had the break higher, printed some new all-time highs, and then just spent the rest of the week in balance. We had a little look into the gap from the previous week. I think really this week we'll be looking for either a gap close or explore this particular spike up here. So that's what we'd be looking for in the rut. So that's pretty much where we're at for the week. That's what happened last week. It's what we are starting to look at this week. Again, it all depends on what sort of mood we have when the futures open later on this evening. This hasn't been too much bearish news out over the weekend, but we'll see how the market digests everything before deciding on which way to play things. In general, I think at the moment the markets are still digesting this news, and we're very much in a wait and see type of mood at the moment, and see how this plays out. I still don't think we're fully out of the woods here. I think this rally last week was weak. I think the market's very much going to go sideways for the time being as it digests this particular piece of news. I don't think it's as bullish as it's being made out, but we can only follow along with what the market is telling us right now. And what it's telling us is that it's digesting the news, it's waiting for more information. And if we start to see the breaks lower, we can then flip to the bear side and take on some shorts, sell some rallies. But if we start to see the markets respecting these trend lines and trying to push higher, then we flip our bias to the long side and we're back in the bull camp again. So it's really a wait and see approach, and it's all going to be about how the futures open, what the cash market looks like in Europe tomorrow morning, and how that carries through into the afternoon session. So that's it from us this week. Thanks as always for watching. If you want to learn more about market profile, by all means visit our website sgfutures.com and look at our level up sessions. If you've got any questions or comments, feel free to drop them in the comments section below. Drop us a DM on Twitter. Otherwise, have a great week and happy trading.